Hello guys, this is a pre-market analysis of 16th of June, and we have seen yesterday everything was positive and we got a gap up, and the gap up went till 24,000 as I discussed in the pre-market analysis itself. 24,000 act as a major resistance, and today also 24,000 is going to be the major resistance. So from 24,000 yesterday at the opening itself, you got a dip of almost 50 points and then came to 23,950 level, and then again it went up to 24,000 and tried to break that, but strong resistance. You can see a good amount of call writing is happening at 24,000 because it's just a matter of 2 days. Market have moved almost 900 points. Day before, a couple of days back, market have made a low of 23,100. From there, 24,000 in a matter of 2 days. When expiry is on today, don't think that the call sellers will allow it to cross 24,000. And if the market is able to cross 24,000, that is the jackpot for you as an option buyer, because that is when you're going to get the real gamma blast. So whatever gap up you got overnight yesterday, much higher move you will get if there is a gamma spike. The speed you will get, the momentum you will get. So that is why yesterday, if you see, I have uploaded the complete video of the live mentoring session, and I have sold calls at the higher level couple of times, and how it managed. Everything is shown there. At the same time, till the double top is made, I'm not taking any buying position. So when the double top is made, that is when I tried for a put trade. So people will have a confusion. Why, despite all this positivity, I have not taken a call trade also on the upside after getting that initial dip, nor I have taken a put trade also, despite the fact that, for last many days, when you get such a gap up, it just got solved into. But yesterday was different, right? It's not like a normal day. But afternoon towards the end, you got that 150 point down move as per the convention as of now, which we can say. But selling call was the best rather than, buying a put or, buying a call yesterday. So that is why initially I started with a call sell and then went ahead. And when I see the double top, then I started buying the puts also. And that's how I have adjusted yesterday's position. So you can see that complete video where I'm discussing the selling strategies, the buying strategies, why I'm not buying a call nor a put for almost 1.5 hours. That's why the full video uploaded, because 1.5 hours we are not in a trade. So only call sell. So there are a lot of other things to discuss, and I have shared a lot of knowledge also. So when you get time on Saturday or Sunday, you can just watch that video. So that will be helpful. Now today, again, 24,000 is going to be the resistance, because yesterday 24,000 it tried to cross and you got a 150 point dip. Now sellers are under complete control at 24,000. So they can defend that level. Good amount of call writing yesterday you have seen at that level, right? So once you got that 850 level, that means 800 is a support level. You got a 150 point dip. Now more calls have been solved. Even 23,900 is solved. So 24,000 is solved. So whatever loss that you had in the gap up, they are trying to manage it with this. Now market is expected to expire in the range of 23,800 and 24,000. If 24,000 crossed on the upside, you'll get good move. Otherwise, it is expected to cross in 800 to 24,000 range. If 23,800 is crossed on the downside also, you can get a good move on the downside, because losses in the call, people try to adjust with 23,800 put selling, even 23,900 put selling, even 23,700 put selling. So that coverage will also have to happen if 23,800 is broken on the downside, because downside is like you can come even till 23,500 easily. Upside is definitely capped. So we are looking for this small range actually today. And because we have a small range, right? Even from seller's perspective, if I talk, we have decided a small range, 23,800 to 24,000. If you get a breakout of that upside or downside, that is when you'll be getting the real move for today. So 24,000 remain as major resistance. That's my point. 23,800 would be a good support. And our market is now turning into a long-term consolidation between that 22,000 low and 26,300, 400 high. So we don't expect such a big move that you are getting in other markets. What you see, fresh all-time highs and all that, you're not going to get. Now coming to today's data, I'll talk about FIIs, open interest and everything. But before that, let me talk about this one major development that yesterday happened is RBI introduced a new monthly data release mechanism. So going forward, from here onwards, RBI will release preliminary balance of payment data every month. So that's an important data that we also need to check. You don't want to know exactly what is balance of payment, what is current account deficit, what is trade deficit and everything. Anyway, I will interpret the impact of that. Just need to watch the pre-market analysis. So the data will be released by 15th day of second subsequent month. And yesterday on June 15th, RBI released April 2026 data, and in July 15 expected to release May 26 data. Now, why this data is important is because the data help you to understand or determine whether rupee weakness is due to genuine economic problems or whether the rupee weakness is simply due to market speculation. So as per data, it is understood that it is because of speculative reasons rupee as of now is weak. Any short covering which is going to come, that can dramatically strengthen rupee. Okay, so if you look at April data, merchandise trade. See, we have in this we have trade account, trade surplus, trade deficit, foreign remittances, and all those different columns will be there. And we definitely have a trade deficit, but we are good in service trade, so that will be surplus. And we have huge foreign remittances, that will also be strong positive. So because of service trade export and the foreign remittances, we can overall come in a surplus. Okay, despite the goods, if you see, that will be a deficit, strongly deficit, because we have to rely on crude oil and all those import only, no other option. But service service is around 18.6 billion positive, and foreign remittances is 16 billion positive. So that 18.6 service export is there positive, and remittances 16 is there. That is against the trade deficit of 28. So 28 here, if you add, that will be around 34. So the current account position overall, if you take, because of these strong remittances and service export, service surplus, the current account is actually surplus. Okay, so overall, if you take, it is surplus, but trade on goods, if you take, that is deficit, and for forever, for long term, whenever you calculate, it will be deficit. It is deficit, and in future also it will be deficit unless we are self-sufficient on crude and all. So that will anyway be deficit only. Now there are capital flows. If you see, there are negative components. FIAs have withdrawn 8.7 billion. Right, and also foreign companies repatriated their profits, which is around 3 billion. Repatriated their profits means the companies who made the profits here, when they take it back. So if you look at the positive component here is net foreign direct investment. So don't just confuse with foreign institutional investment that comes in stock market that we discuss every day, and foreign direct investment. Foreign direct investment goes to establishment of companies here. FPI or foreign portfolio investment or FIAs, what they do is they buy the stocks. The difference is, when you establish a company here, you cannot simply sell and go. You cannot, simply take your money back. But if, just like I am establishing a company, I have a rented building and all, or I have to own a building and establish everything. So that is what FDI. FIAs means I buy a stock today and I sell it tomorrow. Okay, so that is what FII. So FDI is good. FDI inflows there 7.4 billion, but FII outflows major, because they are finding other markets are much more attractive because of rupee depreciation and because of the AI moves and everything. So overall position, if you see, if you combining all these components, India recorded a surplus of around 5.3 billion during April. But the main concern is, the main weakness is coming from banking and other capital account outflows, right? So here, if you see, there is 11.4 billion outflow, and based on the analysis, most of this is actually speculative trading related movement. So what will be the impact on RBI Forex Reserve on this? RBI Forex Reserve declined by approximately 6.6 billion. So as per this data, if you see, the rupee fundamentals remain strong. The significant speculative short positions were actually built against the rupee. That's what you can see. And any major short covering that can strengthen rupee significantly. Okay, so my conclusion here, according to the data, is rupee fundamentals are strong. The speculative pressure that remains the major issue. And if FII equity selling that slows down, then rupee stabilization can happen. It can become much easier also. So this is just for the fundamental understanding. I've discussed so much academics, I know. Let's come back to the US-Iran peace deal update. So Trump stated that oil ships are now using, designated southern routes safely through the Strait of Hormuz. So that's a very positive thing. But still, see, ship tracking data report, in fact, still does not show any such significant movement if you look at that tracking data. But still, the positive is the crude oil price, WTI, is 81 per barrel. and Brent is around 83.5, which is significantly well for us, for India also. So oil price continue to decline. And if you look at the peace deal status exactly, the full details of the peace details are still publicly not available. Iran indicated, implementation will happen only after a formal signing, and some differences still remain between the parties. That's there, according to various media reports. But if you look at US market performance, US market yesterday 1% up, Dow Jones, S&P 1.6% up, Nasdaq 3% up, and Nasdaq have significantly outperformed. VIX is down by 8%, and now it is around 16% overall. So the fear is still now missing from the system. It's gone from the system. Apart from that, one of the important event of this week, US Fed Reserve decision tomorrow. So the Fed interest rate decision is scheduled, and this will be the first major meeting under the new Fed chairman. So market is looking for whether the new chairman follows Trump's preference or maintain complete Fed independence. Okay, tomorrow is going to be interesting because interest rate hike, if that is happening, that is not good for the market. And also Friday, coming Friday is a quadruple witching day. So the potential impact will be like large institutional position adjustments you will see, and that will lead to increased volatility and increased nervousness in the market, and that may have an impact on our Sensex expiry also. Now, if you look at GIFT Nifty, it's around 23,960, which means we will be opening around 23,900, which is good. 850 is where it closed. 900 it's opening. See, 900 means exactly in the middle of my range, right? 24,000 and 23,800. See, guys, so 23,800 if crossed on the downside, that is when put sellers will be in trouble. They'll run for the cover. And 24,000 if closed on the upside, then call sellers will be in trouble. That's when they go for the cover. That is where the option buyers potentially get good opportunity. Otherwise, it just goes sideways and you won't get much big move. So there is no point in trading. Sometimes you need to understand it is not necessary that you need to be there in the trade all the time, especially when on an expiry day when the decay is going against you. Understand, and based on that you trade. So GIFT Nifty is now looking for indicating a 30 to 50 point gap up, a small gap up we may get. So ADRs, if you see, Indian ADRs are positive, HDFC is positive, Wipro is positive. Strong performance, ICICI is also positive. Infosys is underperforming and declined around 1%. Possible reason could be, that annual report with the US secretary, and selling emerged after that. So there is no clear reason actually. I don't know. There is some report related 20F annual report, Form 20F. That's what I can see, but exactly I don't know. So I'm not someone who's capable about talking about that. So institutional activity yesterday, after 11 consecutive days of selling, FII is bought, but just for 200 crore, and DII is also bought for 3,200 crore. So combined institutional flows around 3,400 crore. So the market summary, if you see the positives, US markets did very well yesterday. Oil prices declined further, positive. Rupees fundamental is strong according to the report released by RBI. GIFT Nifty is positive, even if 30, 50 point positive, it is positive. ADRs are largely positive. FIIs turn net buyers, that is also looking good. But what is negatives? Wholesale inflation for May, which came close to around 10%. El Nino concerns that continue regarding monsoon, that is going to make an impact in the after some time, not now. India is going to face good inflation, guys, that's for sure. Okay, no question in that. US-Iran deal still not formally signed, and then it's a weekly expiry today. So it is going to be sideways market unless you get more clarity. And we are entering into a long-term consolidation mode. Fed meeting is there tomorrow, quadruple witching on Friday. So all these are things which you need to keep a watch on that. So trade responsibly, guys, and trade carefully. If you want to trade with us, join our community with a live trading program. Get in touch with us. I see you there. Thank you so much.